Hey Castlemore, welcome to our workshop today at the very school I graduated from. It feels so good to be back. Before we start, we want to introduce ourselves. We're Confidence, Ashley,
Amy,
and Fiona,
a student-led initiative dedicated to helping youth build confidence in financial literacy. Today, we're diving into budgeting, saving, and banking basics. Our goal is to help you leave here feeling a little smarter, a little more confident, and ready to make smart money decisions. Without any further ado, let's just get right into it.
here is a list of the things that we'll be covering today. It's broken down into 2 lessons. Lesson 1 is budgeting and savings, and lesson 2 is banking basics.
moving on to our first lesson of budgeting and saving. So what is budgeting and saving? Budgeting is simply the process of creating a plan for how you're going to spend your money. It helps you stay organized, make smart choices, and avoid running out of money without realizing it. When you budget, you're basically telling your money where to go instead of wondering where it went. Now what about saving? Saving means setting aside a portion of your income for future use. This could be saving for a car, new clothes, a trip, or even just building a safety cushion for emergencies. It's money you intentionally use, not to spend right away, but to help you in the future. So remember, budgeting helps you plan your spending, and saving helps you prepare for your goals. When you use both together, you're setting yourself up for financial success.
Now let's talk about why budgeting actually matters. Why should you budget? Budgeting is what helps you stay in control of your money. It helps you save, it helps you keep track of your spending, and most importantly, it makes sure you have enough for the things that you need while still leaving room for the things that you want. Instead of guessing where your money went, budgeting gives you a clear picture of where it's going. And why should you save? Saving is what allows you to buy the things that you want, whether that's a new phone, a bike, or even a trip. Saving also helps you manage emergencies, so unexpected expenses don't throw you off. And honestly, knowing you have money set aside makes life way less stressful. When you budget and save, you're building something bigger. You're building financial freedom. That means being able to make choices without constantly worrying about your money.
So, what are some strategies for budgeting and saving? Let's go over the most popular budgeting methods, the 50-30-20 rule, and here's how it works. 50% of your money goes into your needs, and these include things you pay for, such as food, rent, transportation, school supplies, and anything essential for daily life. 30% goes to your wants. These are the fun extras: clothes, going out with friends, movies, hobbies, anything that isn't necessary but adds enjoyment. And finally, 20% goes straight into savings. This could be emergency fund, a future goal, or something you really want to buy. The 50-30-20 strategy is simple, flexible, and a great way to make sure you're covering your needs, enjoying your wants, and still saving for the future.
Another fun saving method is the envelope challenge, and it's surprisingly effective. Here's how it works. You label 100 envelopes from 1 to 100. Every day, you pick one envelope. Whatever number is written on it is the amount of money you save for that day. So for example, if you pull envelope 37, you save $37. If you pull envelope 4, you save $4. By the time you finish all 100 envelopes, you'll have saved $5,050. It's a great way to build discipline and make saving feel like a game. Even the Polly Pocket car girl used this method to save up, and it really worked for her.
To make saving easier and more realistic, you can also use SMART goals. A goal should be specific, which means knowing exactly what you're saving for. Measurable, which means setting a clear dollar amount. Achievable, making sure that it's realistic for your situation. Relevant, making sure that it matters to you. And most importantly, time bound, so you should give yourself a deadline. For example, Johnny wants to save $100 for new shoes. He decides to put away $25 a week for 4 weeks and reaches his goal without any stress.
There are 3 main types of savings that you should know about. First is your emergency fund, money set aside for unexpected costs, such as breaking your phone. Next is goal savings. These are short-term goals like a vacation or buying a bike. And finally, long-term savings, which are meant for major future plans like college, a car, or even a home one day. Each type plays a different role in helping you stay financially secure.
Let's talk about saving through banks, because this is where your money can actually grow for you. In Canada, we have a lot of different banking options, and almost all of them offer different types of saving accounts. When you put your money into a bank instead of keeping it in cash, the bank pays you interest, which is basically extra money you earn for saving. So instead of your money sitting still, it's working in the background and slowly growing over time. That's why choosing the right savings account matters. The better the interest, the more money you earn without lifting a finger.
Here's a question. Would you rather save money in a bank or a piggy bank, and why? Teachers, you can pause the video and let your students discuss with the person beside them. When it comes to saving your money, banks can actually offer ways to help your money grow. Most banks in Canada offer different types of savings accounts, and the big benefit is interest, the extra money the bank pays you for just keeping your monies there. So instead of just letting your money sit still, it also works for you. The longer it stays in your account, the more interest you can earn. That's why choosing a savings account is more effective than a piggy bank.
Now we're going to move on to our second lesson for today, which is banking basics. So here are some ideas about banking. So first of all, what is banking? Banking is simply used as a safe space, like a bank, to store and manage your money. Banks help you manage money, save money, spend money safely, and even borrow money when you need it. There's an important part of managing your finances and keeping your money protected.
A bank does a lot more than just hold your cash. It protects your money from being lost or stolen, lets your savings grow over time through interest, and it makes paying for things simple and convenient, whether you're tapping a card or using an app.
Now let's look at the different types of banks and what they do. First, we have commercial banks. These are the regular, everyday banks that you see everywhere, like TD, RBC, or CIBC. They offer common services such as debit cards, checking and savings accounts, and online banking. Next are credit unions. They work a little differently because they're member-owned. That means the people who use the credit union also help run it. They often focus more on community needs and may offer lower fees or better rates. And finally, the central bank, also known as the Bank of Canada, isn't just one bank for the public. Instead, it controls the country's money system, things like interest rates, inflation, and making sure the financial system stays stable.
Banks offer different tools to help you manage your money every day. A checking account is where your spending happens. It's usually for paying bills, using your debit card, and everyday purchases. A savings account is designed for storing money and earning a little extra through interest. Banks also provide loans and mortgages, which let you borrow money for bigger goals like a car or a house. You can pay in different ways using credit cards and debit cards, depending on whether you're spending your own money or borrowing from the bank. And with online or mobile banking, you can check your balance, send money, or track your spending right from your phone.
All right, let's look at a quick scenario. Amy just earned $500 from tutoring. She has two goals. She wants to buy some new clothes, and she also wants to save for a summer trip. So here's the question. Which bank account should Amy use for each goal? Teachers, now's the time to pause the video and let your students discuss. For buying clothes, something she'll spend soon, Amy should use her checking account, since that's where everyday spending happens. But for her summer trip, something she's saving up for, she should put that money into her savings account, so it can grow with interest and stay separate from her spending money.
Alright everyone, now let's talk about debit and credit cards, two very common ways to pay, but they work differently. Debit cards take money directly from your account. You can only spend what you actually have. This means no interest charges, which is great, but debit cards are perfect for everyday things, like buying snacks, gas, or clothes. The only downside is that using a debit card doesn't help you build your credit. On the other hand, credit cards let you borrow money from the bank up to a certain limit. If you don't pay it back on time, interest charges apply. But here's the benefit. Using a credit card responsibly helps you build your credit score, which is important when you want loans, a car, or even a house in the future. Credit cards are also useful for bigger purchases or earning rewards. So the key takeaway is that you should use debit cards for everyday spending and credit wisely, only when you want to build your credit. And remember, always pay your credit card bill in full if you can.
Let's look at Fiona's situation. She wants to start building her credit history so that in the future she can qualify for things like apartments or loans. Which should she use, credit or debit? Again, teachers pause the video and students may discuss with an elbow partner. The answer is credit. Using a credit card responsibly, making small purchases, and paying the balance on time helps Fiona build a strong credit history. Remember, credit cards don't affect her credit, so they don't help her achieve this goal. And for Fiona, credit is the smart choice.
And that concludes our workshop for today. Thank you so much for joining, and we hope you learned something new about budgeting, saving, banking, and managing credit. A big thank you to everyone who participated and shared your ideas. We really appreciate you guys. We also want to give a special shout out to the teachers who made this excellent opportunity possible. Your support today made everything so smooth. Keep practicing these smart money habits, and remember, managing your money now sets you up for financial freedom in the future. Thank you, and once again, we are Coinfinance.
Building confidence in finance.
Just as a fun activity, teachers, we have sent you a link to a Kahoot that you can host for your students to play for some extra review about the topics we've discussed. Once again, we hope you enjoyed, and don't forget to send us the results.